Hi everybody, Basel 3, the Liquidity Coverage Ratio, LCR. Welcome to the reading room of the Basel 3 Compliance Professionals Association, the largest association of Basel 3 professionals in the world. To promote short-term resilience of a bank's liquidity risk profile, the Basel Committee developed the Liquidity Coverage Ratio, LCR. This standard aims to ensure that a bank has an adequate stock of high-quality liquid assets, HQLA, which consists of cash or assets that can be converted into cash at little or no loss of value in private markets, to meet its liquidity needs for a 30 calendar day liquidity stress scenario. The Liquidity Coverage Ratio has two components. A. The value of the stock of high-quality liquid assets. B. Total net cash outflows. A. High-quality liquid assets. The numerator of the Liquidity Coverage Ratio is the stock of high-quality liquid assets. In order to qualify as high-quality liquid assets, assets should be liquid in markets during a time of stress and in most cases be eligible for use in central bank operations. High-quality liquid assets are comprised of Level 1 and Level 2 assets. Level 1 assets generally include cash, central bank reserves, and certain marketable securities backed by sovereigns and central banks, among others. These assets are typically of the highest quality and the most liquid. There is no limit on the extent to which a bank can hold these assets to meet the Liquidity Coverage Ratio. Level 2 assets are comprised of Level 2A and Level 2B assets. Level 2A assets include, for example, certain government securities, covered bonds, and corporate debt securities. Level 2B assets include lower-rated corporate bonds, residential mortgage-backed securities, and equities that meet certain conditions. Level 2 assets may not aggregate account for more than 40% of a bank's stock of high-quality assets. Level 2B assets may not account for more than 15% of a bank's total stock of high-quality liquid assets. B. Total net cash outflows. The denominator of the Liquidity Coverage Ratio is the total net cash outflows. It is defined as total expected cash outflows minus total expected cash inflows in the specified stress scenario for the subsequent 30 calendar days. Total expected cash outflows are calculated by multiplying the outstanding balances of various categories or types of liabilities and off-balance sheet commitments by the rates at which they are expected to run off or be drawn down. Total expected cash inflows are calculated by multiplying the outstanding balances of various categories of contractual receivables by the rates at which they are expected to flow in. Liquidity Coverage Ratio. Absent a situation of financial stress, the value of the ratio must be no lower than 100%. It means that the stock of high-quality liquid assets should at least equal total net cash outflows. Banks are expected to meet this requirement on an ongoing basis. During a period of financial stress, however, banks may use their stocks of high-quality liquid assets. It is important to always bear in mind that the Liquidity Coverage Ratio and the Net Stable Funding Ratio are not meant to be the first-line defense against banks' liquidity problems. The primary responsibility for sound liquidity management must always rest with the banks themselves, not the supervisors and regulators. Furthermore, the liquidity coverage ratio and the net stable funding ratio are relatively simple quantitative measures that cannot hope to fully capture the many nuisances of liquidity risk that a bank may face. Banks must develop a range of quantitative and qualitative controls for themselves to ensure they are prepared for volatility in their cash flows. This is inherent in the complexity of banks' business models. So, do you want to learn more? Sign up to receive our monthly newsletter at no cost. Compliance with the Basel III framework is a moving target as regulators continue to develop new standards and new regulations and amend the previous ones. The Basel III Compliance Professionals Association is the largest association of Basel III professionals in the world. You can easily subscribe at the reading room of the Basel III Compliance Professionals Association. Just Google Basel III Association and you'll subscribe in just a few seconds.